Hello traders and welcome to another video review. Today is Friday, August 11th, 2023. Let's take a look at the Forex economic calendar for today. Some data had been published overnight in form of the business PMI from the New Zealand, which disappoints the market participants with the actual reading of 46.3%, while the forecast was 49.4% and the previous reading was 47.5%. So we will definitely take a look at the New Zealand dollar later on. Business investment and the GDP were two very important data releases from the UK. As you can see, the GDP beats the expectations of 0% with the actual reading of 0.2%, which is better than the last reading of 0.1%. The overall GDP for the month of June is at the level of 0.5%. So we will definitely take a look at the British pound later on today. We got the industrial production data, 1.8%. Manufacturing production data 2.4%, monthly GDP change is 0.2%, and the trade balance is minus 15.4 billion pounds. So those are the data from the UK. What else should we expect? Later on, we got the PPI data from the US as the one of the most important data releases for today. This data release is scheduled for 2:30. Core PPI will be released as well at the same time, and the EAI monthly report is scheduled for release at 10 o'clock. Then we got the Michigan 5-year inflation expectations, consumer expectations, and consumer sentiment data. All of this data are scheduled for release at 4 p.m. And then at the end of the day, we got the US Barker Hughes oil rig count and the total rig count. Both of this data are scheduled for release at 7 p.m. So plenty of data scheduled for release. Looks like a busy Friday. So first, let's take a look at some charts right now, and we are going to start with the New Zealand dollars. So we are going to switch to the 4-hour chart of the New Zealand dollar to the 4-hour chart of the New Zealand dollar to the American dollar is looking very bearish, and it is approaching the technical support and the lows from the last day of the May 2023. So this is the level of 5,980 pips. It's a very important technical support, long-term technical support, and the market is under the pressure. As you can see, the momentum is negative. It's roughly at the level of 36 points. So we should expect this level to be hit very soon. The intraday technical resistance is located at 6,029 pips, and we have another technical resistance, important technical resistance once. It used to be a support, but now it's resistance, 6,045 pips. This is the technical support, this resistance that can cap any kind of a rally from the demand side of the market. So bearish engulfing and a breakout to the downside. We are trading below 50. We are trading below 100 periods moving average, and the level of the technical support looks like it's going to be hit very soon and tested. So right now, if we can add one more line to this chart, we can clearly see that this is a very important trend line, because market recognized it very well. It started from the highs of the 14th of the July 2023, so it's already almost 2 months old, and the market still trades below this trend line as well. So if you want to pay attention to this line, that would be a very good thing. Bearish pressure, breakout of the support. We are waiting for another down movement on the New Zealand dollar. The British pound, after the data release, doesn't actually looks like it wants to go anywhere, because last time we got this slight bounce out of the consolidation zone. There was a zone between 1.2791 and the zone and the lowest level of the zone was 1.2683. Okay, there was a breakout to the upside, false breakout. As you can see, bearish pressure was very strong and started to pushing the prices down. So we have the bearish engulfing extension to the downside below 1.2686, local low 1.2665, and now we are trying to bounce, but again we are roughly around the 50 periods moving average, so there is not that not that much of the momentum here with this bounce whatsoever. It looks like we are going to test sooner or later this very nice hammerish pin bearish candle located at 1.2620. This is the low of this candle. So if there is no really no big increase in a momentum here in the British pound, and if the British pound will not go back inside of this range, then we can reverse and go to the lows of the August 3rd 2023 located at 1.26 and 20. So the outlook for the British pound doesn't look that good as well, and it looks like we are heading lower, and we will be heading lower very soon. If we talk about the British pound, let's just have a quick glance to British pound and the Japanese yen. Why? Because we are testing this level here, which is very important technical resistance level. As you can see, those highs are from the 6th of July 2023. There was an attempt to break out, but again, pin bearish candle on the end of the rally. Today there was attempt to break out again, but then you can see that this candle has not been closed yet, but it doesn't look good as well because it has a very big and long basically upper shadow. So we are waiting for this candle to close. Intraday technical, let's say, support will be located roughly around 183.22. So if we break below this technical support, then maybe 183.1 pip 50 periods moving average might provide some kind of a support. If not, we go longer towards the 50 periods of the moving average located at 181.99, and then the last result is 180.42. This is the last technical support for this very nice movement to the upside. We hit the extremely overbought market conditions yet. There's still slight room to the upside, so we might see some kind of another push here, but it will hit straight on the extremely overbought conditions, so market should reverse lower anyway, and we should see lower levels very soon. So that's the British pound to Japanese yen. And last but not least, let's just take a look at the Bitcoin, of course. So what is Bitcoin doing? It looks like the Bitcoin wasted its potential for the breakout higher, because just by touching the 30,190 level, we got the first rejection. Then there is some kind of a bounce towards $30,099, and then big bearish engulfing pattern, and then we hit the moving averages, both 150 periods moving averages, and now we consolidate around this level. Roughly this is something around 50% of this last movement to the upside. So there is still room to the downside towards the 61%, and then of course the bounce is possible. Let's just take a look. Where are we? So let's do it right that, so you can guys see. There you go. 50% already tested. 61% is right now at the level of 29,250. So there is a chance to hit this level and then bounce, but the momentum, well, it's not that bad. It's 49 almost points, so it's hovering just roughly around the level of 50. So if there is some kind of a let's say bounce from this level, we might see increase in the momentum and the resumption of the uptrend of this impulse to the upside. Otherwise, this last bounce will be treated as a wasted one, and it was just a fake breakout or kind of a fake movement to the upside by the bulls, which means they don't have the momentum to continue it, which is eventually, all in all, negative for the Bitcoin in the short term. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.